This month brought another piece of news that shocked the property market. Perth's property prices have now surpassed Melbourne's by $5,000, and yes, you heard that right. Before the pandemic, Melbourne's property prices were always just behind Sydney's. But now Melbourne's latest median property price stands at $782,000, which is roughly HKD $3.95 million. This is the first time in 10 years that Perth has overtaken Melbourne. Among Australia's 8 capital cities, Melbourne's house prices have dropped to 6th place, third from the bottom. This marks a dramatic shift in Australia's real estate landscape. Naturally, many investors are now asking 2 key questions. First is, has Perth reached its peak? Is it a bubble about to burst? Why are its prices now higher than Melbourne's? Second is Melbourne's market now at rock bottom? Is it time to buy? In this episode, we'll be diving deep into both of these questions, whether Perth has peaked and whether Melbourne is a buying opportunity. Hi everyone, I'm Alison from Australia. My channel focuses on Australian lifestyle, personal finance, and real estate. I'm one of the few licensed professionals in Australia who holds qualifications in both accounting and law, while also working as a real estate agent. My team and I are committed to helping you build high-return, tax-efficient investment portfolios to fully protect your wealth. I'm also the author of Buying Property in Australia for Financial Freedom. Please note that everything I share here is based on personal opinion and does not constitute financial advice. If you're interested in one-on-one consultations, you can visit investwithalison.com and book a session that suits your schedule.
According to data from PropTrack, Perth's median house price has now reached $787,000, while Melbourne stands at $782,000. Don't underestimate that $5,000 difference. It signals a major shift in the structure of Australia's property market. Back in March 2020, when the pandemic first hit, Sydney had the highest median house price in the country, followed by Canberra, Melbourne, and Hobart. At that time, Perth was ranked 7th. But property rankings have changed dramatically in recent years. The latest PropTrack Home Price Index from May 2025 shows Sydney still leads in median prices, followed by Brisbane in 2nd place, then Canberra, Adelaide, Perth, and finally Melbourne. During the pandemic in 2021, Perth was still one of the cheapest capital cities in Australia. Its median price was a full 40% lower than Melbourne's. Over the past 5 years, from March 2020 to early 2025, Perth's house prices have skyrocketed by 75.9%. Why has Perth's market surged so dramatically in just a few years? It's actually not hard to understand. Perth has an extremely low vacancy rate. In March last year, it hit a historic low of just 0.4%, virtually no vacancies. Affordability has been a key driver behind the price growth. When cities like Sydney and Brisbane became increasingly unaffordable, capital naturally flowed into the relatively cheaper Perth market.
During the recent interest rate hike cycle, rental yields in big East Coast cities couldn't keep up with mortgage repayments, meaning loan payments were much higher than rent. But in Perth, not only could properties be rented out almost immediately, it was also one of the most affordable cities for buyers. On top of that, rental yields were exceptionally high. That made Perth very attractive to investors during the rate hike environment. High rents meant borrowing costs could be easily covered. As a result, investors who wanted to buy during the high-interest environment often prioritized Perth because repayments were more manageable. So you could say Perth's popularity over the years has come from different factors. Initially from being undervalued and offering great value for money, and later, even as prices rose, from its high rental yields, which were especially appealing during a period of rising interest rates. However, now that Perth has overtaken Melbourne in price, some of those advantages are starting to fade. Looking at last year's data, Perth recorded an astonishing 24.2% annual growth. But this year, the pace has slowed. The Real Estate Institute of Western Australia, REIWA, predicts Perth house prices could grow by 10% in 2025. Many investors are asking, has Perth peaked? Will prices fall? In my view, while Perth's growth has indeed slowed, there are still no clear signs of a bubble bursting. Just because Perth prices have risen doesn't mean the market is unsustainable. In fact, even as Perth gets hotter, its affordability has not decreased. It has actually improved. That might sound counterintuitive. How can prices rise and yet affordability improve? Let me explain that in more detail. According to the latest March 2025 report from the Real Estate Institute of Australia, REIA, although property prices in Perth have increased, the proportion of income that Western Australian households need to spend on mortgage repayments has actually decreased by 1.7 percentage points, dropping to 40.8%. Why has this occurred? The Real Estate Institute of Western Australia, REIA, identifies two major reasons. First, the 0.25% interest rate cut in February has directly eased mortgage repayment pressure for homeowners. Second, Western Australian household income has experienced strong growth, with the median weekly income rising by 1.1% this quarter to $2,709. In simple terms, while property prices have risen, lower interest rates have reduced repayments, and increased incomes have alleviated financial pressure on households. This effectively leaves families with more disposable income to purchase homes. Currently, homeowners in WA only spend 40.8% of their income on mortgage repayments, compared to the national average of 48.0%. In New South Wales, and where Sydney is located, the figure is even higher at 56.8%. This makes WA one of the most affordable housing markets in the country. Meanwhile, Perth's population is also growing rapidly. According to the Australian Bureau of Statistics, ABS, as of June 30, 2024, Perth's population reached 2,284,400, a year-on-year growth rate of 3.1%, the fastest among all Australian capital cities. This growth outpaces even Melbourne and Brisbane. Despite such strong population growth, housing supply in Perth is declining. A recent report by the Western Australian Treasury Corporation shows that in April 2025, seasonally adjusted dwelling approvals fell by 5.7%, following a 7.1% drop in March. In summary, while Perth's property prices have increased, affordability has actually improved relative to household incomes. Combined with the fastest population growth in the nation and shrinking housing supply, Perth still has strong momentum for further price growth, just at a slower pace than in the past 2 years. Switching over to Melbourne, has its housing market bottomed out? Is now a good time to buy? Why is Melbourne's property market currently so weak? One major reason is the introduction of tax policies, particularly land tax. Previously, over 360,000 property investors in Melbourne were exempt from land tax. But starting January 2024, many suddenly found themselves liable as the tax-free threshold was drastically reduced from $300,000 to just $50,000. For land holdings valued above $3 million, the tax rate can reach as high as 2.65%. This has significantly increased the holding costs for investors. The situation is even worse for foreign buyers. In Victoria, they are subject to an additional 8% stamp duty upon purchase, plus a 4% annual surcharge on land tax, the highest in the country. As a result, even those who are still willing to invest in Victoria are now only confident enough to purchase apartments rather than house and land packages. One of the biggest differences compared to Perth is Melbourne's lower rental yield. Even for relatively inexpensive properties, yields often hover around just 4%. For local investors with mortgages, the interest rate is typically around 6%, meaning many are experiencing negative cash flow. Looking at Melbourne's market, we can clearly see how government policy, particularly punitive land taxes, has had a substantial impact on the overall investment environment. These aggressive tax changes have discouraged many investors from entering the Melbourne property market. But is Melbourne really that unworthy of investment? Although Victoria increased land tax during the 2023-24 financial year, this adjustment is part of the state government's COVID debt repayment plan. It is a temporary 10-year policy scheduled to end on June 30, 2033. Moreover, there has already been considerable public opposition to the new land tax. Many of us have been voicing our complaints to the Victorian government, which is now facing increasing pressure. There's a possibility that the policy may be reviewed in the near future. While no changes have been made to this heavy land tax as of the time this video was released, we can remain hopeful to see how the government responds to the public outcry. In an effort to stimulate the off-the-plan property market and support first home buyers, the Victorian government has significantly reduced stamp duty for new townhouses and apartments. For example, if you purchase an off-the-plan apartment valued at $620,000 that hasn't even begun construction, the stamp duty could be reduced to just a few $1,000s, saving you over $20,000 to $30,000 compared to before this policy came into effect. In fact, Melbourne is already showing signs of recovery. According to CoreLogic's latest auction data from June 15, 2025, Melbourne recorded a clearance rate of 72.2%, the highest in Australia. Compared to last year, when clearance rates in Melbourne hovered below 70% and even close to 60% at times, this is a notable improvement. It's true that prices have not yet returned to their previous highs. The May 2025 Home Price Index from PropTrack shows that Melbourne's property prices have declined by 0.38% year-on-year and remain 2.85% below the market peak in 2022. If you'd like to learn more about the June housing data, feel free to leave a comment or email us at marketing@rightkeyinvestment.com. We'll send you the full report translated into Chinese. However, if we look closely, we can see that Melbourne property prices are just beginning to sprout again. Melbourne recorded the highest monthly growth in the country at 0.79%. The next highest was Adelaide at 0.52%. This may seem small, but it's significant. It clearly suggests a rebound. By comparison, Brisbane's monthly growth was just 0.24%, and Perth's was 0.27%. So it's fair to say Melbourne's housing market is gradually warming up again. Right now, Melbourne feels a lot like Brisbane and Perth several years ago, when both cities went through sluggish periods, fell behind in pricing, and then boomed as development and population growth surged. Those who bought into Perth and Brisbane during their downturns enjoyed substantial gains through the full cycle from bottom to peak. So you may be wondering, is Melbourne currently an investment opportunity? Is now the right time to enter the market? Personally, I believe Melbourne presents a solid investment opportunity, but only for financially capable investors. As mentioned earlier, buying property in Melbourne primarily for long-term rental, not short-term Airbnb, will likely result in negative cash flow. Many properties in Melbourne yield only 3 to 4%, while mortgage interest rates, even after rate cuts, are still around 6%. If you cannot accept negative cash flow, and you're deterred by Victoria's higher land tax compared to other states, then Melbourne may not be right for you. However, if you're comfortable with both of these challenges, I do believe Melbourne holds significant long-term investment value. This is largely due to Melbourne's strong housing demand. According to the Australian Bureau of Statistics, ABS, Melbourne's population in June 2024 was 5.35 million. The 2017 Plan Melbourne Strategy Report projected that Melbourne will surpass Sydney to become Australia's most populous city. By 2050, Melbourne's population is expected to grow to 8 million. According to the 2023 Planning Victoria report, that projection has now been revised upward to 9 million. Meanwhile, the population of the entire state of Victoria is forecasted to reach 10 million by 2051. This level of growth is immense and unstoppable. Melbourne will become Australia's largest city by population, and internationally, a major commercial and strategic hub. If we crunch the numbers, from today's 5.35 million to 9 million in 2050, this means Melbourne is set to grow by 3.65 million people over the next 25 years. That's an average of 146,000 people added each year. Now think about this. A Melbourne with a population of 9 million will require around 1.6 million new homes. However, the planning approval process in Melbourne is notoriously slow. According to data from the Australian Bureau of Statistics, ABS, the number of housing approvals in Victoria actually declined in April, showing a 3.3% decrease from the previous month. This construction pace is far behind the rate of population growth. In such a situation of high demand and limited supply, Melbourne's housing prices clearly have the potential to rise. Additionally, with interest rates still relatively high and construction costs continuously increasing, the supply shortage in Melbourne is only going to get worse. Melbourne's population growth is mainly driven by overseas immigration, interstate migration, and natural population increases. Moreover, Melbourne's strong education sector and commercial activity also attract more people to settle there. To cope with this expected growth, the government has already begun launching large-scale infrastructure projects. One key project is the Suburban Rail Loop, a massive infrastructure plan costing over $30 billion. This will be a 90-kilometre circular rail line connecting Melbourne's southeastern and southwestern suburbs, including a stop at the airport. Just the eastern section alone is projected to create up to 8,000 jobs. Over the next 25 years, Melbourne is expected to welcome an additional 3.65 million residents, and they will all need housing. Yet, with current approval rates lagging so far behind population growth, the supply-demand imbalance will only worsen. This means housing prices are very likely to rise in the future due to the strong demand. From a property market cycle perspective, Melbourne is currently at the bottom. So, for those who have the financial capacity to hold through this downturn, there's a real opportunity to ride the entire upward cycle. If you're an Australian tax resident, enduring this downturn may not be as difficult as it seems. Even with a monthly negative cash flow, you may benefit from tax rebates through negative gearing. If you'd like to understand negative gearing in more detail, feel free to check out my previous videos. In fact, if you're investing in properties priced between $500,000 and $600,000, and you're a resident, PR, or citizen in Australia, the land tax you pay in Melbourne would typically be just over $900 to a little above $1,000 per year, which is quite manageable. You might wonder, where in Melbourne can you still find such properties in that price range? Well, the western suburbs of Melbourne, such as Wyndham Vale and Werribee, still offer relatively low entry prices. Wyndham Vale is only 4 train stops from the CBD via the V line, and it's less than an hour's drive. If you take the Princes Freeway, you can get to Werribee in about 35 to 40 minutes by car. Alternatively, you can also take the Metropolitan train line from the city directly to Werribee. I believe this area holds great development potential. Just take a look at Sydney's western suburbs like Kellyville and Box Hill. They are much farther from the city centre but now cost over $1 million. Melbourne is set to surpass Sydney in population in the near future, and properties in the west that are still priced around $500,000 to $600,000 have significant investment potential. I've filmed many videos about Werribee. If you're interested, feel free to check them out. My own family recently completed building a house in Werribee, and we just received the keys. What we appreciate most about Werribee is that despite its low property prices, it offers a beautiful beach and is also a tourist destination. Many people visit Werribee for the open-range zoo and the historic mansion. It's also a great place for Airbnb rentals. On top of that, Werribee has 2 major hospitals and a top-performing public school, Suzanne Cory High School, which ranks 6th out of over 560 schools in Victoria. This attracts many families seeking a strong educational environment for their children. What's more, Werribee isn't short on amenities. It has a large shopping centre, Pacific Werribee, golf courses, and it's home to the prestigious Melbourne Veterinary School. Victoria University also has a campus in Werribee in addition to the University of Melbourne. My family and I are genuinely fond of Werribee. Even though we don't live there ourselves, we strongly believe in its long-term investment value. If you're interested in investing or have questions, feel free to leave a comment below. If you'd like to book a one-on-one consultation, feel free to WhatsApp or email me, or visit my website at investwithalison.com to schedule a time. Thanks for your time, and I'll see you next time. Bye-bye.